My name is Harry Guinness, and I'm the CEO of Blueprint. I'd like to begin by acknowledging the traditional custodians of the land on which we meet and pay my respects to their elders past, present and emerging. I extend that respect to any Aboriginal and Torres Strait Islander people here today. When we launched Blueprint Institute in June 2020, we sought to develop policy roadmaps in the service of the next generation, not just the next election cycle. We embarked on several bold policy challenges: climate change, labour market reform, tax policy, which are bound together in an overarching theme. How can Australia chart a course to pandemic recovery and beyond? Australia took a hit through the pandemic and we rebounded strongly, but a V-shaped recovery won't be enough. In 2019, GDP per capita grew just 0.6%. Since 2013, it's averaged 0.9%, but during the preceding half century, it averaged a full 2 percentage points. For too long, Australia's productivity has lagged historical averages. Boosting productivity and enhancing prosperity requires more than tinkering at the edges. It requires serious policy reform. In the wake of the pandemic, our policymakers must exploit every opportunity to get the economy booming again. At Blueprint Institute, we believe we have a once-in-a-generation opportunity to engage in structural reform across the board, including in tax reform, which is why we're here today, in climate change and energy. And if you've seen anything on the Institute's website or in the news, you'll see we're very passionate about that policy area. We hope to begin work on childcare and early learning. We believe that we need to do wholesale welfare reform and long-term industry policy. In each of these areas, government is a necessary and powerful actor that can enhance the quality of our lives when administered with vision, efficacy and integrity. But this is not possible without a robust taxation system. Tax is at the heart of our social contract with the state. It is the price we pay for a civilised society. As such, our tax system should not be taken for granted. If it is not fit for purpose, it can erode economic activity. It can erode our trust in the system, and indeed, it can erode the quality of the society in which we live. And so today's discussion, and I'm very excited that you're all here for it, gets to the nub of what Blueprint Institute is about. Bringing critical thinkers, bringing leaders in their fields together to examine key policy challenges facing this nation. We're deferring to expertise over ideology. Now, you all have a tote bag, a swag bag on your chairs. I encourage you to have a look in there. In that bag, you'll have 4 of our latest reports, and the report that we're releasing tomorrow, titled Bye Bye Tax Returns. This forms a part of our Igniting the Next Boom series, where we propose tax and fiscal policy reforms to ignite the next era of economic growth. Within the report, you will see a strong commitment to evidence base. You'll see rigorous economic analysis, and hopefully you'll see accessible and interesting prose. You'll also see a strong sense of values and a sense of balance. We value the productive capacity of individuals without demonising the role of government. We value economic prosperity whilst considering the impact of reform on the most vulnerable. We seek to increase net social benefit, not GDP alone. We'd like to stop complaining about the size of government and start thinking about the quality of government. This is our blueprint, if you like, but today each speaker will present their own. The format of today will be in 2 parts. Part 1 consists of presentations from Jason Falinski, followed by Stephen Hamilton. Jason is the chair of the Parliament Standing Committee on Tax and Revenue and the federal member for Mackellar. Stephen Hamilton is our chief economist at Blueprint Institute and an assistant professor of economics at George Washington University. He will effectively be launching our paper today and providing a summary for you. In part 2, you will hear from our expert panel and then have the chance to participate in Q&A. I have no doubt today's discussion will be robust and entertaining, and I hope you enjoy it. A 3-course lunch will be served throughout, and beverages, including wine, are available on request. While emissions reductions are not achieved in inner-city wine bars, we're hoping tax reform may be. Please turn your phone to silent. thank you for all being here and for supporting Blueprint Institute. And with that, I'd like to invite Jason Falinski to lead proceedings.
Thank you, ladies and gentlemen. As the Chair of Tax and Revenue Committee, I've had all your tax returns pulled. Some of them make for very interesting reading. A number of you, however, really do need to submit them as quickly as possible. I would like to thank Harry for this. He did say to me when he was thinking of doing a seminar on tax, look, we won't be able to fill a room of 30 people. Here we have 120 people in the room, plus he's having to live cast it on Facebook. I assume that's because we have Joe Masters on the panel. Otherwise, who'd want to come and listen to me? But he's also done a great thing. He's got Joe and I in the same room for the first time in 18 months, where she can set me straight in person as opposed to over Zoom. We have John Hewson, who's been setting me straight since 1992. I don't think he realised at the time it would be a lifetime's work and will continue for quite some time. And of course, Miranda and Steve Hamilton. Steve, who believes he can fix the Australian tax system. And we in Canberra are determined to show him that he is wrong. And of course, Michael Stutchbury. Michael, I think, is quite seriously the most important person in this room. And I say that partly because I like getting covered in the AFR, but also, more importantly, because, believe it or not, politicians do respond to good or bad media coverage. And until Michael took over as editor of the Financial Review, I think that it had slipped from the front pages or the pages of most of our media the importance of economic reform. And Michael has, both in his editorials and specifically in the paper generally, given more weight to coverage about the importance of economic reform. And I think that that will, over time, drive more policy and more energy in that area. And so thank you, Michael. Harry said to me, can you please give some introductory remarks? I asked him for some guidance. He gave me none. Therefore, this speech is on him. So I've entitled it a tax system for working Australians. And I think there are two ways of looking at tax systems generally throughout the world. The first is the one that Adam Smith came up with, which was 4 principles that basically a tax system should promote liberty and prosperity and fund important social endeavours. He said that it should most importantly be fair, not progressive. It should be certain, not arbitrary. It should be convenient to pay, and it should be minimal but efficient. I don't think that when Australians talk about their tax system, we often have in mind these 4 principles. I think we more have in mind that of the finance minister of Louis XIV, Jean-Baptiste Colbert, who once said, the point of taxation is to gather the maximum number of feathers from the goose with the least amount of hissing. And this policy of hissing is incredibly important when we talk about tax policy in Canberra, because it is the one thing overall that does drive a lot of what we do. So often there is the right thing that we need to do, and then there is what we can do given the amount of hissing you can get. But there are, I think, 5 areas that we need to look at in our tax system. The first is, and I think this is primarily the most important thing, our tax system has become too complex. We have run too much social policy through our tax system, we have created too many exemptions, and we have made it too difficult to actually understand what impact our tax system is having when we make changes. It is well known now that there are plenty of times when we make changes to the Tax Act that no one understood because no one can possibly understand the entirety of the tax legislation that have then put the Tax Act has made it contradictory. So, and we've also created systems where we're trying to do one thing in one act and another thing in another part, and of course they work against each other. Our tax system is, on some readings, the largest tax act anywhere in the world. It is larger than that of the United States. It stops actual productive economic behaviour in Australia. The classic case is around employee share schemes, where we have essentially created a tax system that means that companies are not interested in issuing shares to their employees, but employees are not interested in receiving them because the ATO taxes you when you leave that company. I had someone, and he admitted that it was a good problem to have, who came from Canberra to see me the other day, and of course it's not a listed company, but he says the minute that I leave Canva, I will trigger roughly $12.5 million in tax liabilities. I'm now essentially indentured to Canva because I can't afford that amount of money in tax. And we know that issuing shares to employees are the things that create innovation and productivity. We've seen that in so many parts of the world. We discourage work and we encourage welfare. If someone is sitting on welfare and has the opportunity to move into work, their actual tax rate is sometimes higher than 100%. We have created a system that discourages people from moving from a system that we know does them long-term harm into a system being work that actually does them long-term good. We need to fix that. We have created, and on this, Stephen and I laugh, but you look at Sir James Mirrlees, who was a Labor voting economist in the UK, who started off trying to prove that progressive tax systems actually create more prosperity, and in the end had to admit that they don't. And he was, so a left-leaning economist did the important intellectual work of showing that flatter taxes actually create the incentives that people need to build prosperity and build the lives that they sort of want, because what he found was that when you get to higher levels of tax, people tend to step out of the system rather than working more because they don't need the money. And off them often hang a lot of jobs without that person at the top. And so when we create tax systems with very high marginal tax rates, we are not so much hurting the people at the top because they simply stop doing the extra marginal amounts of work. We hurt the people who no longer can get jobs because the people who can lead them refuse to do it. I think the other thing that we have to finally look at in Australia is that our industrial relations and the way that we work is changing. We're moving to a sense of portfolio work. So I know many of you in this room work for one company, but many of you don't. And increasingly, as we move on, more and more people will begin to work for a range of companies and have a range of different types of work. Call it portfolio work if you want. And how we understand community risk and how we empower people to do those things is really important, and how the tax system and the welfare system interact with each other to give people a sense of being able to undertake those risky behaviours and get the returns that they want, while we as a community can guarantee that they won't fall into poverty, is incredibly important as well. I admit that I think that so much of what we do in this country is about helping those people who are at work live better lives, and that is driven primarily by the tax system. And if we can't get this right, if we can't actually undertake these reforms, then we are ignoring a large part of Australians who go to work every day to make this nation a better one. And it's through their hard work and through their taxes that we can fund the essential services that we believe that we as a community should provide. So this is actually really the most important debate that we're not having. This is the debate that no one cares about because it's too technical and too hard to understand. But it is the most critical one. It is the one that can drive so much entrepreneurship, so much wealth, so much prosperity, and so much certainty in an uncertain world. Thank you.
Hello, everyone. You know, when I'm not the first person to mention Jim Mirrlees, it's going to be an absolute cracker of an event. I'm sorry up front already. And the other thing I'm sorry for is that you have to look at me and not that. We should have done it the other way around. It's absolutely beautiful. Thanks so much for coming today. I'm Blueprint's chief economist. As Harry said, in your tote bag, your swag bag, there's a copy of our latest report. You're all getting it in advance of the launch tomorrow. Maybe I should move in front of this so that people at home can hear. You're getting it in advance of the release tomorrow, so have a look on your way home. It's beautiful and I think very exciting. So I usually work in Washington, D.C. My office is 5 blocks from the White House. I have a lot of friends in D.C. who work at think tanks. Heaps. D.C. is full of think tanks. It's a rich and diverse space. You have a think tank for literally everything you could ever want one for, right across the political spectrum. The Tax Foundation is one of my favorites as a tax guy, but there's also a Tax Policy Centre, right? And that rich and diverse think tank space generates a diversity of excellent ideas. And if you look at Biden's administration, it's packed to the gills with people that he dragged right out of those think tanks. Australia does not have that. We don't have that. We have some really good think tanks. Most of them look at a single issue. Very few of them, I think there's just one, looks at everything, right? And so when I talked to Harry at the end of last year, and he said, you know, we're building a think tank and we want to, you know, make a difference to Australia, it didn't take very long for him to convince me that it was a good idea, right? In Australia, there isn't a single think tank on the ideological spectrum from the Grattan Institute to the CIS. Well, there is now, okay? So I'm delighted that you all came. I'm delighted, if you haven't heard of Blueprint, that you have now. And I'm delighted to talk about our report today. It's about tax. I'm sorry. I promise to make it as exciting as I can. I am 34 years old. Don't let the hair fool you. I was 14 when John Howard launched the GST. And I was 14, and I still remember to this day that ad campaign with Joe Cocker, Unchain My Heart, people walking around the grocery store with a trolley covered in chains. You remember? I mean, if I remember, you better remember. No offense. And the chains fell off them, right? And they were unshackled from the burdens of the previous tax system. Now, that is an accurate reflection of what the tax reform did, right? The tax system we had before the GST was a nightmare for everyone involved. And that tax reform fixed that. And that's one of the very few big ticket tax reform items that has succeeded in Australia. And so what I think we should take away from that as the key lesson is tax reform has to be about making people's lives easier. No one cares about what the tax rate is. No one cares. No one cares about economic efficiency. They don't even know what it means. But what they care about is the burden that the tax system puts on their lives, which is real, right? Australia spends $2.3 billion a year on personal tax accountants and lawyers. $2.3 billion. I had a look, and that is Coca-Cola Amatil's annual revenue from non-alcoholic beverages. So we spend that doing our tax returns. A huge resource sink, a bunch of very talented people who'd be a hell of a lot better elsewhere. Okay? 70% of Australians use a tax agent to fill out their tax return. 70%. That is like one of the highest on earth. Okay? We estimate, so the one reason for that really high rate is that Australians claim a lot of deductions. That's the key. We've pre-filled income, we've pre-filled government benefits, we've pre-filled super, we've got My Tax going, but the reason you still have to do a tax return is people claim deductions. 70% of Australians claim tax deductions. On average, they're about $2,200, right? And they go through a nightmare of administrative burden, keeping a box full of receipts and taking them down to the tax agent and sitting there for hours working through all that to claim something that's something like $500 or $600 of tax benefit from all of that effort, right? So I think what we need in Australia is a tax reform effort that focuses on the benefits tax reform can bring to people's lives. And the way to start is by getting rid of all of that rubbish. Okay? So tomorrow, we're launching a plan for a $3,000 standard deduction that people could take when they complete their tax returns. It's optional, so no one would be worse off. We believe with $3,000 deduction, 80% of people in Australia would no longer have to claim deductions. All of that burden would be gone. We estimate, using high quality evidence, that that would save Australians $4 billion a year in compliance costs. And it would pave the way to eliminating 9 million tax returns a year. The ATO could just send you a bill, done. That would save nearly $1 billion in tax agent and legal fees. So that's $5 billion. What does the policy cost the taxpayer? In tax cuts, $5 billion. Okay? So there's, to my mind, it's a no-brainer, right? The government pays $5 billion, everyone gets a tax cut of between $400 and $1,000 a year, and all of that burden is wiped away. Okay? Why this policy hasn't ever gotten up, it's not a new idea, it's a really old idea. Why this policy hasn't gotten up, I have no idea. Both sides of politics should love it. Nobody loses. Everybody wins. It's expensive at $5 billion a year compared to some items, right? But it's terrific value for money. So, on that note, thank you all for coming. Have a look at the report. You know, we've put a lot of work into making it fun. It's fun. I promise you, it's fun, right? I teach tax at George Washington University, and I have to teach this to 21-year-old Americans, so I know how to make tax fun, right? So please read the report. It's called Bye Bye Tax Returns. That's where the fun starts. It's going to launch tomorrow. We have a nice opinion piece in the Fin that tells some of the story, and I'd love to hear what you all think about it. With any luck, the government will do it, and all of our lives will be much easier. Thanks so much for coming, and I will welcome the panel. Michael, come on up. Yeah.
Thank you very much, Stephen. So you can see why I was so excited when we were establishing Blueprint Institute and we wanted to communicate complex economics and public policy solutions to a broad audience. How excited I was when I met Steve. I'm sure you'll love the work in the report. I must say my heart sank when he told me he was a tax economist. But I am soon quickly coming around to that. Let me introduce the panel. If you'd like to come join us, I'll introduce you as you're up here. John Hewson was the federal opposition leader from 1990 to 1994 and is chair of the Tax and Transfer Policy Institute at ANU. Joe Masters is chief economist and partner at Ernst & Young, Oceania. Steve Hamilton is the most enthusiastic proponent of tax reform that I've ever met. And Miranda Stewart is professor at Melbourne University Law School and honorary professor, Crawford School of Public Policy at the ANU. Finally, Michael Stutchbury is editor-in-chief of the Australian Financial Review and one of the most vocal proponents of tax reform in the country. Thank you very much.
Thanks, Harry, and thanks, Steve, for that introduction. I would say at the outset, and welcome to my panel. They've been introduced by Harry. Terrific panel. We've got an hour or so, which is quite a while, to talk about various issues. We will be going to the floor, and I'll call to. There is a very scope to ask questions from the floor, and there's a lot of experts sitting down in front of us here today. So we'll definitely want to get some questions from them. At the outset, I'd like to say that the Financial Review is happy to support initiatives such as the Blueprint Institute. We're not endorsing it or anything that comes up, but we're very keen to promote proper debate about serious issues from a relatively centrist position. Can be a bit centre-right, can be a bit centre-left, but it's a pretty mad political world out there at the moment. It's very polarised. There's a lot of sort of rubbish political debates going on. So I think that from the Financial Review point of view, we think we should be more serious debate generally in the middle of politics to really get things done, and clearly there's a lot of things to get done. So the Financial Review is very pleased to support institutes such as the Blueprint Institute, which is setting out to do just that. I'll say as well, it's as another little advertisement for the Financial Review, it's our 70th year this year, started in 1951, and one of the things that's really noticeable as I look through the old newspapers from like the 1950s onwards, sort of every day, and it's really quite a joy to do so, what the role, and just following on from what Jason with his kind words, that the Financial Review does claim to have tried to play a significant role in promoting good policy in Australia over all these decades. And one of the things that really struck me is just coming from 1951, which I was a bit hazy about, some of the things going on back then, was the extent right from the beginning in this post-war period, the Financial Review was quite critical of import protection at that time. We had about 7 years of import licensing going on, where the government actually controlled the amount of imports coming into the economy, because had a continued balance of payments constraint, fixed exchange rate, always worried about the reserves running out, but it also meant a lot of central control of the economy and a lot of protection, a lot of high cost burden. And right from the start, the Financial Review took a critical view of that, and that flowed through into some of Jason's predecessors, such as Bert Kelly appearing with his own column in the Financial Review as a modest member and so forth. So some of these debates, we think that we've been with them for decades, and I think, as was said, that you do have to be at these things for a long time, because you have to make the case over and over and over again, or explore the issues and allow everybody to have their case. So this session is panel session we've got now is quite broad. What will it take to fix our broken tax system? But it's also time for the Blueprint Institute's paper that Steve just outlined, proposing a $3,000 standard personal tax deduction. I'll plan to propose to start off with a brief intro about the setting about where we are with all of these, then go into a bit of the standard deduction issue, ask to get some questions from the panel on the floor on that issue, and then we'll go into some of the broader questions. So maybe as a scene setting, it has been a long time between drinks for serious tax reform, as Steve said, 1985, 2000, and then not really, we've had the debacles of the mining tax and the carbon tax, but not much more since then. The COVID crisis has proven not to be a burning platform for policy reform for just about anything. The Morrison government is quite politically damaged. It's got the slimmest of parliamentary majorities and is proving to be quite risk averse. As we've seen, it's more than happy to throw tax reform to the states, such as with the New South Wales proposal on stamp duties. The May 11 budget, I'd like to hear John Hewson on this later as well. This looks like it's shaping up to be a big spending Tory budget. More social programs, mental health, NDIS, aged care, but with not a lot of political stomach around for sharpening up the economy's capacity to pay for it, such as through a more efficient tax system. And though business investment is supposedly a key goal, our reporting suggests that the Treasurer is unlikely to want to lose the $10 billion or so in annual revenue that might come from the BCA proposal, for example, for a permanent 20% investment allowance, especially when the big miners are making super profits at the moment. Nevertheless, there's a lot of tax issues swirling around. The Financial Review and others have reported that the budget will extend for another year the low and middle income tax offset, raising the prospect that this sort of quite complicated part of the tax system gets embedded, entrenched in the structure of the tax system. The Morrison government seems to have dropped plans to mess with the increase in the 9.5% super guarantee. The OECD just week before last pointed to the costs of a two-tier corporate tax rate and repeated its call for a tax mix switch and for action on stamp duties. Biden administration has gotten on board for calls for a global minimum corporate tax rate and proposed increasing the Trump 21% American corporate tax rate. Kevin Rudd last week called for a super profits tax on the big miners, but was immediately slapped down by Jim Chalmers. And the government, finally, the government is reeling from the gender revolt and no doubt looking to give something to women, including in areas such as tax and childcare. So that's the scene, hopefully. Maybe I could throw over to Steve to begin with. On your proposal, and yours and the Blueprint Institute's proposal for a standard deduction, you spoke a little bit about what you're talking about is looking at this in a different way, about not so much the little triangles that economists draw on their graphs, the theory of this line and cutting this line, the dead weight loss, but you're talking in a technical term, you're talking about just the damn inefficiency and paperwork and stuff that we have to do, and saying that's something which would amount to a genuine tax reform.
Yeah, that's right. So I think there are good conceptual bases to support some tax deductions, right? I mean, for a business, for example, if you weren't allowed to deduct your capital spending, it'd be a big problem for your investment, right? The trouble is, in practice, that creates a nightmare for the tax office in terms of distinguishing between real expenses, real things that generate income, and consumption, right? And then it generates a gap that people can stretch in terms of what they claim, right? So the last issue, obviously, is there's a real efficiency loss to the compliance and administrative and enforcement burden that's generated by all of this. So it's a huge mistake, and this happens very frequently among economists, but it's a huge mistake to look at one narrow margin, one narrow dimension of efficiency and support tax reform on that basis and ignore all of these other issues that are practical concerns. I'd like to just pick up one example there from you, Michael, which is this mining tax example. I started at Treasury as a graduate a month before the mining tax was announced. So it was kind of like a baptism of fire. 3 months later, Kevin Rudd was gone. The mining tax, I think, is a very good example of how not to do tax reform in Australia, right? If I asked a normal person in the street, what is this for? I guess you want to take money away from rich people? I don't know. Like, what is the point of this tax? Now, an economist would say it's efficient, and you won't find an economist that I know that would disagree, right, in terms of the pure efficiency argument. But it doesn't resonate with people, right? Who cares, right? Taxes cannot be about raising revenue. No one cares about that, right? They have to be about practically improving people's lives. I think people could support a mining tax if it had been designed with a dividend, so that you took the proceeds from the mining tax and you paid out a flat, subsidy to everyone in the country, and you sold it as a mining dividend. That would have sold very differently to a policy that we had. So I think, we have a thesis here with this panel, which is how do we fix our broken tax system? I think we need taxes that we can sell to people.
Look, I liked your example in the paper, what I've read about comparing it to if customers of Telstra, what they have to do. But maybe you could...
Yeah, so the deduction thing is crazy. So, a lot of people in the room would claim deductions, I'm sure, right? And it's a nightmare process. And, it's not like when Telstra doesn't come around and say, so who did you call? Can you itemize for me? Write down a list. Who you called, how long you called them for, when you called them. They just send you a bill, right? And a lot of countries have moved to the system with tax returns, right? Where they have the systems necessary and in certain cases standard deductions to just wipe away all of that complexity. And in the paper, we measure very accurately this massive compliance burden. So it's money on the table that we really, I think, with a pretty simple change that I think would sell very well to the electorate. If the Libs were to put this up, I don't think Labor would oppose it, right? That would just wipe away a huge amount of inefficiency and cost and burden and hassle in people's lives.
Okay, well, let's maybe put this to the acid test of our panel here. Maybe some of your numbers, and no doubt not very many people have read the paper, but some of your numbers you put up there before. Australians spend $2.3 billion a year on tax accountants and lawyers. 70% of Australians use a tax agent, which is very high by international standards. On average, Australians claim $2,200 deduction. If you bring in a $3,000 optional standard deduction, that would mean 80% of Australians would no longer have to fill in a tax form. It'll all be done automatically. They just get the tax officer to tell them at the end of the year whether they owe or are going to get a refund. That would save $4 billion of compliance costs and $1 billion from somewhere else, and that's about equal to the lost tax revenue of equal of about $5 billion. That's the thing you're trying to do. Now, Miranda, you're the deep tax expert, I think, here. Would you spend $5 billion, if you had $5 billion to play with on tax reform? Is this something that you'd go for?
So, look, it is a good idea. So I think, but you've posed quite a tricky question, which is maybe you've got limited fiscal bang, and what do you want to do with that limited fiscal bang? So there are a couple of things. I guess the first thing to highlight about the proposal itself is that there is another side of it which might squeeze the people in this room a little more than the nice $3,000 standard deduction, and that is that you're proposing to tighten up the test for deductibility of itemised expenses to make them wholly and exclusively in the earning of income. So that will, you're doing two things. You're not only giving a $3,000 deduction, but for anyone whose expenses are higher than that in respect of their employment, you're actually giving them a tighter test. That's pretty essential. Otherwise, the cost is going to blow out. You've still got a very generous...
So we didn't cost that part.
You didn't cost
the
that
$5
part?
billion is purely the standard deduction.
Okay.
But if you wanted to do the other part, it would offset some of that.
So yeah, if you did the other part of that proposal, that might save some of your $5 billion, if you like, and that might be a good policy switch. Mm-hmm. You get your simplification, but you also tighten up the test. Rethink proposal included tightening up the test, Henry tax review, considered standard deduction. These ideas have been around for a while. I mean, I suppose another way to pay for it, you know, there are still some outstanding tax cuts out there in our agenda, aren't there? We have the stage 3 tax cuts legislated. You know, and as you say, there's the Limito, which, you know, is this really complex thing, but obviously politically pretty important and popular, which is essentially directing
probably
a
not
tax...
baked into the forward estimates at this stage.
Well, it may not be, but it's essentially directing a lower tax burden to sort of moderate earners.
But can I ask, what sort of things are we talking? Between maybe you and Stephen, Miranda, what sort of things are we talking about here that you're going to that will come into the standard deduction? These are deductions for work-related deductions, which are typically, no doubt, people in this room claim to the hilt. But what?
Education, travel, clothing, food. That's it. Mainly vehicles, transport.
Yes.
That's it. And of course, you've said your tax-related, paying your tax agent.
Yes, exactly.
I'm glad
no offence to the accountants in the room.
So, you know, our core business at Melbourne University is teaching advanced tax law to highly skilled graduate students, and I'm glad to say that their jobs will still be okay because they'll be working in the corporate and upper end of the spectrum, but this might put quite a few you know, run-of-the-mill tax agents.
And what sort of things do you advise them or educate them in how to make the most of those tax deductions?
Well, I've got a consultancy rate.
There must be things, but is there things like, you know,
it's very lucrative.
You know, it's work-related sort of meals and mileage.
Look, if you
on your
do
car.
part-time Master of Tax study with me, which maybe
It's tax deductible.
tax deductible.
And this wouldn't be now under this proposal?
Well, no, it would be because we're more expensive than $3,000 a year.
Exactly.
So I'm
we'd
going to
be
put it another way.
fine.
Are there things here that we'd actually want to encourage and we won't be encouraging? We presume if they're genuine work-related expenses, people want to, you know, invest in their future income earning. Are there things that are worthy of encouraging? It's the purpose of it.
So the Henry Review carved out work-related education expenses in their proposal for this exact reason. It's a trade-off, right? So there are some efficiency benefits to having things out. There are some efficiency benefits to having things in. So it's not clear. And, you know, we proposed one option. We went through the form. We thought carefully about it. We did the costing. But it's, at the end of the day, a very simple idea. And it's not a new idea. Review after review has proposed it, right? I don't think people have sold it very well. And I think we make a huge improvement in that respect. But at the end of the day, Treasury would have to implement it. And, you know, all of those things could be up for grabs, really.
How much of an outlier is Australia on all this?
Just unique. I mean...
We do have very generous deductions for individuals, considerably more generous than most other comparable systems. And of course, New Zealand is always our counterexample, no work-related deductions at all. So look, I do actually think it is a good idea. It would mean the revenue can target its enforcement at the top end, where the expenses are bigger, and it would still allow some deductions at the top.
So John, I'll come to John and Joe. John, obviously you've been right deep into the policy area in your time, both in the art of politics and in the details of economic theory and tax theory. What's your initial response to Steve's proposal?
I think given my background, I don't do minimal. So you've just looked for minor changes, ad hoc changes within the tax system. It can be difficult to do. Not saying that that's a direct comment on this initiative, but there are a lot of elements of the tax system that need reform. I also think that as background to this, the tax office is getting very close to the position where they can actually send you your tax burden. They have access to a multiplicity of data sources such that they can actually write your tax return for you and send it to you, actually almost eliminating the need for you to do it. And I think that's where they've been going and getting improved access to a whole host of other data sets which allow them to basically know everything about us, whether it's banking money or banking details or health or whatever. They are in a position to largely do that. So they're working towards a set of circumstances where this could be done.
Yep.
And it could be done easily because they could just move to it as a one-off, whether it's 3,000 or another number. I think the difficulty is always, the political argument, where's the money come from? How are you paying for this? You can see benefits, which you've identified, 5 billion versus 5 billion, but, how is it going to be funded? Miranda's taken the brave move, saying let's move against those higher end tax cuts, which, if you're going to leave those people in a position to do their own returns, then you are able, I think, to look at whether they're paying, in terms of the aggregate, a fair share. So they're sort of the constraints on it politically. I think you'll have difficulty selling it as a one-off change, and you'll get a lot of questions about what's the incidence of the change, and there'll be differences. There'll be anomalies.
Wouldn't a great mass of Australians think they're going to get a percentage of their marginal tax rate of the $3,000 cheque, and they'd be happy about that? Or is this one of the things that Australians like doing? Is filling in?
No. I think that one of the major weaknesses of the tax system as a whole is just compliance costs. They are massive, not just in the household sector or the personal sector, but
wouldn't this be
a
popular thing to get rid of that? You don't think it necessarily?
Yes, it's a popular argument to run. Yes, but then the debate will come about what's the other side. What are we really losing to do this?
Who are the winners and losers?
Yeah, winners and losers. You'll have that debate inevitably in the Australian political scene.
Well, clearly it would be distributionally, it would be a progressive thing.
Yeah, it is progressive. It's sort of the current deduction system is modestly regressive. It's actually much less regressive than you think, because wealthier people claim more deductions, but it doesn't go up that fast as a proportion of their income, right? So this would tilt it back to being flatter, right? So it does make the tax system more progressive.
And if you pay for it by taxing the top end,
it would be even more.
Tilt it even more.
Yep.
And Joe, what's your thoughts on listening to this discussion as to whether you think this is one of the things we should put at the top of the list to try and get through?
Sure. So I think it's always hard to go last when all the good arguments we made. But look, I think, prima facie, it's an appealing policy. We do see it work quite well in New Zealand, which is much more extreme with no deductions at all, and their productivity benefit from that is really, really high. I'm not sure if this is the right thing to say on a tax panel. In my mind, this is almost red tape compliance policy rather than tax policy. I'm not sure it's a fundamental shift in the way that we think and the way that we tax. So we're tightening up and we're making it a bit easier. So I think about it a bit more around red tape. And I think, we are in this position where, as you said, we've had almost no big bang tax reform, a government that doesn't seem to have even a conversation started about the big bang reforms. We sort of all know what we need to do. We've had countless reviews, including, of course, the Honorary review. But I do wonder if we can tilt the conversation around compliance and red tape and sell it to people around making your life easy. We might get enough done around the periphery to have a productivity dividend.
Look, I think one of the arguments drawing on the New Zealand experience is you're giving people a choice as to whether they want a lower tax rate or they want some form of benefit directed to them. And I think New Zealand's done a very good job of demonstrating the lower tax rate point, which is what you said, that people don't understand tax rates. I think in the New Zealand case, with no tax-free zone, right, their marginal rates are lower and they cut in at lower income levels. That makes a big difference to the sort of system we're working with.
Yes.
Just to the floor, there must be people who've got some questions. See one at the back here. And just please, obviously, Aurora, I think, has got the microphone over here. She's coming with it right now. And state your name and affiliation would be great.
Okay,
It's very distracting.
can you hear?
Stand
I'll
up.
stand as well. Okay, Chris Evans, University of New South Wales. It's a good debate to be having, and it's a debate that's been going on for a long time. I've spent most of my life in tax, working in compliance cost calculation, estimation, and mitigation, and also spent a lot of time looking at this standard deduction and how it might work. We found there were two major problems. You've sort of alluded to them, but I think they're more real than you suggest. One problem is that when you give people choice, you can have your 3,000 deduction, or you can itemise, and you're going to itemise under stricter rules. People still go for the choice. People still say, well, actually, I think there might be more than 3,000, so I'm just going to calculate it instead. So in fact, you haven't mitigated the compliance costs at all. You've given them the possibility of an easy way out, but the likelihood that they'll calculate to see which is the best way out. And the second major objection we found, and we surveyed, I think at the time, 2,000 or 3,000 tax practitioners, was that although personal taxpayers were in favour when we surveyed those, various other stakeholders were in favour, the one body that would not countenance such a change and would be a major impediment to bringing in such a change were the tax practitioners. Now, you could argue till you were blue in the face that, look, you could do much more meaningful things with your life than deal with tax compliance. You can actually help the business to improve. It made not a jot of difference. So, great idea. It's the practicalities that stop it.
Can I? Yeah, let me respond to a couple of things. One, great points. So the first one, you have to imagine it's sort of a sort of one-off thing. So I mean, I think people would kind of do that once, figure out, no, this is not worth it. Next year, I'm not going to bother, right? The other thing is, I think we have to think about opt-out versus opt-in, right? So if we structured the system so that it was opt-in, as in opt-in to itemizing, that we know from behavioral economics, the defaults are really powerful, right? So if you had a system where, at the end of the day, the ATO just sends you a notice of assessment in email, in hard copy, and you have to look at it and then make a decision. Do I want to go and amend this online or fill out a form? I have to imagine you're going to get what you see in practice in the US is just above the threshold for the standard deduction. People still don't claim deductions, right? They opt in to the standard deduction. They actually claim the 3,000 is less beneficial than the 3,500 they had, but they decide that the $500 is just not worth it, right? So I have to imagine if we really greased those wheels, had it as an opt-in to itemizing, you could get to a place where, you got a lot of people just, going with it, right? Getting a bill in the mail. Now, I'm not a politician. There are a couple of politicians in the room. I can't help you with the accounting lobby. There are some accountants in the room, maybe, who won't like it. But let me say something about principles of good policy. I think if an industry exists because of bad government regulation, we shouldn't worry too much about the effects on that industry. Reform happens all the time. The rules change all the time. We banned guns in Australia. Did we worry about all the gun shops in Australia that closed? No. If businesses exist because of bad government regulation, those businesses should understand that their time is limited, right? And that over time, the policy space is going to get better, and those jobs aren't going to be needed.
Okay, I'll look for another question before I go to this gentleman over here with the microphone. Ask John, as a previous practitioner of the dark arts of politics, how would you feel about taking on several thousand tax accountants in a political battle over this?
Well, I can hardly be objective about any of this,
Well, yeah,
but I think that it is a very significant lobby and a very effective lobby, and you'll be cutting Miranda's consultant
should be, yes. Yeah.
quite significantly.
Sorry.
I think that there will be a reaction, obviously, particularly if you went through the corporate sector where the big dollars are spent in minimising tax.
Okay.
Yes, Michael Potter from the Financial Services Council. I was just wanting to ask about the $3,000 figure. We heard earlier that the average deduction was $2,200, I think.
Yeah, something.
So, a question: why 3,000? Why not a smaller number? Because the smaller number, you obviously, you know, get fewer people choosing the standard deduction, but the cost to the budget would be quite a bit lower. Why? So, for example, why not 2,200? Why not 2,000? Why not 1,000?
Yes.
And I guess another thing is, if you went for that lower number, you could say, well, we try a lower number and see how that goes, and then you ramp it up if it actually works, and you don't ramp it up if it doesn't work.
Yes, very, very, very good question, Michael. So we went through my favourite section of the paper has a supply and demand diagram in it, obviously. Please look, the section has a parentheses wonkish, like Paul Krugman puts on some of his more technical columns in the New York Times. But it's a good read, and it explains our rationale behind the $3,000. And it is a kind of welfare analysis, right? It's thinking about the cost of the tax revenue versus the compliance cost savings, right? So as you ramp that threshold up, you capture more and more people, but at a slower rate, because you're getting out to the tail of the deductions distribution, right? So you could add another 1,000 and you're only getting a few more people, right? The other issue is as you ramp up, it's costing you more and more in terms of the budget, because you're not only giving that higher standard deduction to the new people that you bring in, but also to everyone else that's already in. So it's expensive. So you get this increasing marginal cost to the budget and a declining marginal benefit in compliance costs. Now, genuinely, we did the analysis and the number was 3,000, right? So $3,000, like a bullseye. It was if Luke's here somewhere. Luke did that. There he is. And it was like right on the button. It was a very good moment. And the key to that number is 80% of people it would capture. If you went from 3 to 4,000, 3 to 5,000, right? So you almost double it. You only go from 80% to 90% of people. So the budget cost doubles, and you only get an extra 10% of people. So as you get higher and higher, it's a bad idea. It gets harder. Now, you're sort of the second half of your point, I think, was why not start at a lower number? And look, this is the right answer, frankly, in terms of efficiency. But yeah, you could introduce a $2,000 standard deduction or a $1,000 standard deduction, and phase it in over time. And we've got a table in the paper showing how many tax forms that would capture. So that's totally a possibility for the politicians trying to implement it.
Okay, and we've got to move on to broader issues because time's a constraint. But Miranda, you'd like to make a point.
But just a comment, some of you might remember, certainly my fellow tax academics will remember, there was a proposal to have a much lower standard deduction. Was it I'm looking at them, was it a Labor Party proposal? And
Wayne Swan,
it was definitely too low. I mean, politically, not necessarily on the economic marginal calculation, although it was lower than that.
Yes.
So probably economically it was too low as well. So you can't really sell a lower one. The other comment briefly to make is that you had sort of said, well, you just get sent a bill, which I must say most people, I suspect, wouldn't like. I mean, the thing individuals like about tax deductions is they like a refund. Not a bill. So I guess
everyone would get a refund.
Yes, but perhaps after that, pay-as-you-go salary waging withholding would be calibrated, so that would potentially be the end of the tax refund for the majority of workers. Maybe that's a good thing. I don't know.
It's a design choice.
Okay, we should move on. Time's a constraint to our broader issue because the tax system is broken, according to the title of this talk here today. And Joe, if I could start this off with you, what is in your mind? What is the essential problem with the tax system, and does that, and given the recent history, does that call for another attempt at big bang reform or incremental reform? And if incremental, what would you start with?
Sure. So the system is broken. I mean, Jason talked about that. The big fix is, I guess, the one that we all know that gets talked about all the time, which is the balance of our tax, the need to increase our GST rate and broaden its base, and reduce our income and corporate tax rates. We also drive, now you might correct me, Miranda, but something like 90% of our tax revenue from 10 taxes, and we have about 100 taxes in our system. So, I don't know, get rid of the other 90, unless they've got a sort of social or behavioural objective, would seem fairly evident to me. I don't think you find an economist that would argue against a higher GST and without a broader base. Can we do it? Well, there doesn't seem to be any appetite anywhere that I can see for big bang reform. We are seeing it in New South Wales, I guess, with this land tax versus stamp duty. That's a good debate to have. I think if I had to pick something incremental, I think it would be federal government support of states for that kind of reform. We know that things like stamp duty and payroll tax are some of the least efficient taxes that we have in our system, but very difficult and costly for states to reform. So I think it has to be incremental, and I think that's probably one that I would put at the top of the list. I mean, you could pick lots.
Come in on the state government stamp.
To
stamp
support,
duty,
to
land tax.
support
that.
states.
Yeah.
And once you get one big state, actually the others will fall into line as well.
So,
Just quickly, there's a tax in Australia called the Deer Velvet Levy. That's all I have to say. A levy
We
on,
get rid of that.
A levy on deer velvet. I don't know. Okay.
So, John Hewson, obviously you've fought a big political battle over the tax mix switch issue. Is that still the central sort of problem, or are there other things that you want to highlight?
I think to start on this, you've got to recognise the context in which you're doing it, and you've got to have an understanding of the appropriate level of government spending. And that's changed a lot in the last 12 months even, with the shift between the Commonwealth and states' responsibilities. And, you know, the tax system itself, if you look at it, it is inefficient, it is complex, it is inequitable, and it's probably vulnerable in terms of its sustainability. So they're the main weaknesses. But you've got to look at those questions in the context of what you're trying to fund. And we kept separating those two debates. I thought at one stage we might move the idea of a national cabinet and so on, we might move towards a more sensible structure of our federation with an allocation of responsibilities and a clear definition of roles and responsibilities, so that we could look at the expenditure consequences of that. And then when we get that number, go and look at how we best can fund that, what's the most efficient way to fund it, the fairest way to fund it, the simplest way to fund it, and so on. And that debate is very difficult to have, but in that context you can look at scrapping a lot of taxes instead of the transfer. I think the shift from stamp duty to land tax is a sensible thing, but it's only part of the big problem. The same as corporate tax. I mean, it's not a sustainable tax base in my view. It's getting, and profit-based is probably wrong. We've got to move away from a profit-based corporate tax. The big switch is definitely still an element of what we should be doing. We've had a lot of experience. I mean, what was done in 96, 98 has got some holes. I mean, what the tax is on is not rising as fast as the expenditure that's not on. So it's not the growth tax people had assumed. It's guaranteed an annual political shitfight between the states. There was a meeting recently where we raised the issue of the GST, and the only state response was Western Australia got special treatment. We want to pull that back. It's more about that than it is. It's the politics of it rather than the... You know, you've had two state premiers from different persuasions, Mike Baird and Jay Weatherill, promote an increase in the GST for different reasons, a broadening of the base perhaps as well. I mean, that's the way in which you can afford a big bang. You get $100 billion out of broadening the base and raising the rate, there's no doubt about it. It's then a question of how you allocate that. So these are difficult questions, though, in an environment where...
And are you surprised that, given the sharpest contraction in the Australian economy possibly ever, and as the same with the labour force, and even though we've had a surprising V-shaped recovery perhaps, are you surprised that this shock hasn't produced a burning platform, or do you think things, and given the federal-state nature of the problem, that's something that can come onto the agenda once we've got the emergency, so to speak, out of the way?
I think we've seen the beginning of what will be a longer-term debate about federal-state relations. I mean, the Commonwealth has clear responsibility, for example, for quarantine. It's in the Constitution, Section 51. They had clear responsibility for aged care. They managed to push those to the states, and now the states are reacting to that. The Western Australian stance today is a good example of that. So that life is getting more difficult to get cooperation at the federation level. But I think that, in terms of what happened, I mean, there's a very simplistic way of looking at it. We have to respond the way we did as the government. We imposed a recession. We've turned that around quickly. But there's no question about the sustainability of that recovery. I mean, a 3% growth rate in 2 quarters, which doesn't recover what was lost in the first half of last year, may get us back near to the pre-COVID level of GDP. But we still have an output gap of about 10% to where we would have been if we'd met the forecasts that were made at the time of the start of the COVID pandemic. So we are in very difficult circumstances in terms of sustaining that moving forward, and there's no recognition of that politically. As you said, I think the budget will be, it's a pre-election budget. It's going to be targeted at particular groups, more money for women, childcare, domestic violence, maybe something on regenerative agriculture, something, like you can just tick a few boxes. It's not about reform.
And Miranda, and then perhaps Steve, if there was a big bang tax reform, Miranda, do you think that as the OECD called for a couple of weeks ago, that and they mentioned that Australia has, and this seems to be the conventional wisdom, low level of consumption tax, relatively high burden of tax on income, that's a return on growth, and that is as John's been through that battle, that is the central thing to unknot, from which you would then unknot the rest of tax reform, or what?
And look, I think, I mean, as Joe said, the state tax reform needs to be thought of as a productivity reform, and with productivity return, and all the economic, and it's one of those things, there has been quite a lot of economic analysis of this over the years, and if the federal government would actually explicitly support and lead those state reforms, that transition away from just solely duties towards the land tax, not necessarily 100% transition. I think there might be a case for duties at the top because of the way our markets operate in cities. But a federal government gesture in support of that reform process, and support means financial support, right? Explicit recognition that the states have these substantial expenditure responsibilities, that they are performing, reasonably well in COVID. On the whole. So I would have thought that would be a really good productivity reform for the nation that would help that recovery out of COVID. I think consumption tax, it's 20 years since the GST was enacted, a bit over. It is actually time for a proper review of the base and the rate. Broadening the base, we could be taxing education, private education fees, we could be taxing carbon emitting foods, for example, just to be controversial. Meat would be one example of that. Not to be too provocative, but we should do a reform.
And vegetables as well, presumably.
Sorry?
And vegetables as well.
No, vegetables are much less carbon emitting than
you'd put
meat.
a GST just on meat and not...
Yeah, well, there's a good argument for that. There's actually an environmental argument for taxing meat and dairy. Yeah. But anyway, we don't have to...
An ethical one as well.
And an ethical... So there is a... there's an argument that we should be doing that review of the GST rate and base, and we should be combining that with federal government support for state tax reform. On corporate tax, we might come back to that.
Yeah.
So I think with the GST, it's just a strange situation. We've given the federal government the revenue capacity, and we've given the state government the spending capacity. And any economist you talk to will say, well, that's an agency problem, right? You've got one person raising the money and another person spending the money. And we have all of this argy-bargy in the federal-state kind of relations over this. Now, I think we've got to figure that out one way or the other. We have this strange situation where, you've got the federal government paying state governments for their schools and hospitals and everything else out of GST. I think if we raise the GST, we'd have to give compensation, but all of the GST goes to the states, but the compensation would come via the income tax, which is federal government revenue. So we have a huge hole in the federal government's revenue base. The only way to do that is to get rid of all of the payments to the states, right? And have it all just have the GST just ported directly across, right? So I would love to see a 20% GST that's on everything, and we could radically reduce income taxes, right? But politically, I don't know how the hell you do that. The other thing I would say is, and this is important, the federal government has a target or a cap on its spending of 23.9% of GDP. Now, that was brought in by Labor, if I remember correctly, because they wanted to make sure they looked, responsible. So they went and said, okay, how much revenue did we raise after we introduced the GST? 23.9? Well, let's just put a cap there. So in 20 years, you think we haven't spent more money on things? You think the government hasn't made, commitments to the people to spend a greater share of our economy on stuff, on aged care, on schools, on childcare, on the NDIS?
Actually, we do, and we borrow some of it.
Well, we've committed to that, and yet we have this cap on spending that has no basis in cap on tax revenue, that has no basis in anything, right? So
yeah, but don't you need some discipline, because it seems now money is no object now. You can borrow whatever you want. The Reserve Bank governor goes to Canberra and says, actually, here's how you create money. I'll create it out of on the Reserve Bank balance sheet. But so don't you have to have some sort of discipline against that?
So when we came into the crisis, we had hundreds of billions of dollars worth of debt, and the reason we had hundreds of billions of dollars of debt is we couldn't raise any revenue to pay for it because the government was hitting the cap. Right? So you talk to people in the previous government, and they were saying, well, we had to give away the money because we'd violate our cap, right? So I would love, and Harry mentioned this in his speech, and I think it's dead right, I would love to move on from this obsession with the size of government, right, and think a lot more about the quality of government. The American libertarians have figured that out. They call it state capacity libertarianism, and I'd love the focus here to move to that basis.
Yeah, well, you might say that we've spent a hell of a lot more on schools, but the PISA results have actually gone down, so it doesn't seem to be generating a return on it. Yes. But Miranda, I thought that was quite an interesting argument, that maybe the way forward is for the feds to get behind the state mix on the change on the land tax stamp duty. They put a bit of money in because the states lose a bit of revenue early up on all of that, and if they got behind that, that would be a way we could perhaps move things forward.
And look, the GST then is a part of that, the GST review and reform. I must say I wouldn't go to 20%. 12, I'd be happy with 12. But and a broader base. But So if we come on to move things along under company corporate tax, and I ask Joe and Miranda, maybe Miranda first, the OECD also came out and said that the two-tier tax system, 30% for bigger companies, 25 going down to 25 for smaller ones, is just a penalty on growth. It's a disincentive for companies to grow. What would be your take on that in a world now where there seems to be some global movement on global minimum tax, corporate tax rates? Yeah, it's such a mess, isn't it? Those tax rates, we really got ourselves into a bind because of political constraints, I guess, on sort of some broad brush reform, which would have been that broad corporate tax lowering for all corporate entities. Look, and now we've got this really complex in the SME sector, 27, 28.5, 27, 25, imputation credits following and calculated at different levels, a distinction between passive and active income flowing into the imputation system. It's really a mess. And, we had decades of avoiding that kind of complexity, which actually other countries have in their systems, and we've fallen into that hole. So I really think we should fix that. I mean, I've said for a long time, and I would support Henry Review's, there's an old proposal to bring Australia's corporate tax rate to 25%, even though, so globally we are seeing this push towards some sort of minimum corporate tax rate. We'll have to see what happens with the G20 OECD, the inclusive framework negotiation, but with the US in the room, which they weren't before December, that makes a big difference to that negotiation. So we may see something. The US will probably raise it to maybe to 25. So at 30, we're still high relative to, I think you're probably seeing a median sort of moving towards 24, 25
so would you say
around the world.
For a capital importing economy, generally like Australia, even though we might have a capital surplus at the moment, that is a restriction on attracting capital and growth in Australia of having a 30% tax rate?
Look, it seems to me, and actually there is a recent, quite a good working paper Tax Transfer Policy Institute's put out. I'm not an author, so I'll just advertise that paper for them, which is quite good. And what it demonstrates is the differential impact of the tax rate on different segments and different industry sectors. And there's no doubt that we have, as you say, a very profitable mining sector. In some areas of mining, we have a profitable financial sector. We should still be taxing those sectors, and so thinking hard again, not being afraid of the mining tax, coming back to it, I think probably is important. But that, I think our headline corporate tax rate is really meaning that there's advanced industrial sectors, there's advanced manufacturing, there's innovation sectors that are not happening here, that are not developing here as much, and it is partly tax driven. And we're also seeing a lot of pressure on cross-border tax planning. So, companies are trying to get those effective tax rates down with base eroding payments, interest payments, transfer pricing, and we know there's a lot of enforcement needed in those sectors. If we can just reduce some of that a little bit, that will be, an efficiency cost and an administrative cost saving.
And Joe, can I ask you your view on the 30% tax rate and the 25% for smaller companies, and then flowing into should the government, to promote business investment at the same, maybe they're not going to do that in the budget, but should they then confront a tax allowance, an investment allowance like the Business Council is proposing, or is the loss of revenue there too much for them?
So I think the two-tier corporate tax system, as Miranda's outlined, it generates complexity and distortions in the way, particularly our small businesses grow and the restructuring that they do around that. So that seems pretty clear. I think this issue around business investment's actually really critical, much more critical than just the tax debate, right? So we know that to build an Australia that provides economic opportunity for young Australians and for new Australians, we need stronger investment, stronger innovation, better business dynamism, and that wasn't with us before COVID, and it's certainly not here now, right? So if we look at the investment allowance, we are seeing businesses respond to that. We can see that in the data. But actually, economics tells us that mostly that just brings forward investment that would have happened otherwise. So I think it does have a role to play in counter-cyclical policy, but is it productivity enhancing tax reform? I would argue no. And I do think that the better way forward is to try to reduce your overall corporate tax rate, attract investment from offshore, improve profitability, improve that ability to invest. We do hear people, and other people on the panel may have a better understanding of this than me, but all this patent box, R&D incentives. We see countries like Singapore, for example, give a discount on their corporate tax rate for particular incentives, investment incentives. Could we look at models like that? I'm not an expert on which of those are the best, but we do absolutely as a country need to improve our business dynamism.
But in a moment, just before I go to John, we've covered a few subjects. So after this, we'll go to a bit of the audience as well. So put up your hand, catch my eye, and we'll ask a few questions. But John, if you could take it.
Just 2 quick points. I mean, the corporate tax debate has been distorted by the focus on headline tax, not effective tax rate.
Yep.
And the US Budget Office a year or so ago put out the numbers for Australia: 17.5% effective tax rate in the corporate sector. And the debate of the race to the bottom to lower the headline rate is meaningless in that context, I think. And the second thing is, you have to ask yourself the question about investment allowances and so on. We've got the lowest cost of capital than any of us can remember. And we've had all sorts of investment incentives, but the non-mining business investment is flat, falling, and likely to continue to fall. The issue is how you turn that around. And if you have to be profitable to get a benefit from the tax or whatever, it's not going to do that. It's not going to stimulate that sort of investment. So I think we need to think about lowering the tax rates in the US, and the expectation, for example, that they would stimulate investment. But all they did was stimulate, corporate tax buybacks and dividend payouts rather than real sector investment. So.
Thank you. So from the opportunity from the floor. One over here, gentleman over here.
My name is Stan Turnbull, and my question is, about when you talk about corporate taxes, that they don't look at how investors get overpaid because they create profits that go unknown, uncontrolled, and indefinitely into the future. They don't look at the investment time horizon of investors, which is normally less than a patent, less than 20 years. And you're giving away unknown, uncontrolled profits indefinitely if you don't look at investment time horizons. And as accountants do not measure those overpayments or surplus profits, they can't be taxed. So the solution is ownership sharing. So you affect the tax rate depends upon to what degree they share ownership to create a citizen's income.
Actually, I've got a response to that, not so much about the citizen income idea, but the idea of profit sharing and resources. And to think about Australia's mining and resources sector, one of the challenges with the super profits tax and with designing mining taxes generally, of course, is the cost of investment in projects differs very significantly across sectors, across mines, across commodities, and their long-term investments as well. Perhaps in our early history we did this, but we don't have so much engagement in it now. There is actually an argument for profit sharing or for investment sharing between government and the private sector in the mining sector in particular, and that might be a way of managing your long-term investment.
And would that include sharing the losses as well? Because that was part
well,
of it.
Well, it does, I guess.
And
there
would
you
the
could put a
government
floor.
actually share the losses in a big commodity price downturn in which the budget was under?
Look, it's something that gets thought about more in the developing country context, 50-50 sharing, major mining projects. It's not sort of a laughable thing. It's actually something that in the mining sector could be considered more carefully and would enable the return to government and the return to the private sector to be more carefully calibrated.
So we've turned the question really into getting into the area of Kevin Rudd just last week, called for a return of what was called the super profits tax back in 2010. Maybe I'll start with you, John. Is that we're going through this surprising new iron ore boom with the iron ore price in US dollar terms about where it was at the peak of the iron ore of the last boom a decade ago, and in Australian dollar terms it's higher again. What would your thoughts be on that?
I think the key argument there really was, or should have been, a fair distribution of the benefits of the development of that mining industry. And it comes back, I think, to where you're giving privilege to particular industries, social licences to mine, or social licences to run a bank, and so on, whether it's reasonable that the owners of those institutions take all the profit, and whether the nation as a whole loses some of it. So I think this profit-sharing concept makes a lot of sense. I think the super profits tax was pretty difficult to apply and to understand, and of course politically just easily killed in 3 weeks before an election. But I think that the essence of the argument was lost in that.
But wouldn't that be something that if to bring that in, you wouldn't need a big package? Because Labor brought it in with the GST excluded.
Yeah, Labor looked at the Henry Tax Review, 138 recommendations, they picked half a dozen.
Picked one, yeah.
And we'll run on those, whereas in fact it was Ken wasn't asked to give a package, but he could have.
Yeah.
But he went through each of the elements of the tax system, strengths and weaknesses, pluses and minuses, costs and so on, costs and benefits and so on. But so it's very unfair to give a government a string of recommendations like that and let them cherry pick, which is what they did. And so, of course, they got politically burnt on a couple they cherry picked.
So, Steve, I may throw to you on the resource rent tax, if you like.
So again, I'm in full support of. I would have been fully supportive of the RSPT if they just bumped the uplift factor by a couple of points.
That's what they should have done.
Just a little bit. Twiggy got up and gave that speech, and Twiggy was dead right when he gave that speech. He was right on the economics. And the people in Treasury, stamped their feet and said no. So I think a small change would have made that a good policy, and I would have been fully supportive. The one thing I would say is the Greens got PBO to do a costing of it recently. And they had a look and thought, how much money would this have made had it been implemented? And the thing that shocked me, and I mentioned this on Twitter and people went a bit apoplectic, is it doesn't raise that much money because the design refunds state royalties, right? Because the whole point is to get rid of state royalties. And because they refund the state royalties, the net revenue is not that big. It lets you cut the Medicare levy by 1%. That's it. So all that political pain for 1 point on the Medicare levy, if I was a politician, I don't think I'd do it.
Throw to the audience again for any questions. Yes, we've got one over here.
Thank you. I know that this isn't directly relevant to tax policy, but I think
That's a problem.
but I think it's fundamental if you're going to make major changes like tax changes in the federal sphere, and that is to have a fixed 4-year term of government. Every mainland state, I should say, has been given one by the electors, and I think until we get one at the federal level, they're not going to take on this hard tax reform that is so fundamentally needed.
Yeah, well, that's a relevant question. John, would you like to engage with that?
Well, look, I think a longer term makes sense, but I mean, not in our world where the focus is entirely on short-term politics. Just gives them 4 years to play with it instead of 3. And they don't take the old idea that in the early years you really move decisively to make the big reform decisions which you handle over the next 1 year, 2 years, 3 years, whatever. But you do need a level of certainty. I think the British system of 5 years with at the end of the 4th year you specify the dates, you take the politics out of the date. That's probably sensible from a government administration point of view, but you've got to change the people that are playing the game, because they're too focused on just the politics of the day. The big announcement today, another one tomorrow at a different location, Not about actually working strategically to solve a problem. And it begs the question whether you can seriously look at genuine tax reform or genuine response to climate and so on within the current political process, whether you need to take these issues out somehow with some layer of bipartisanship in an independent authority that's empowered to do it.
Okay, good. Quickly moving along, just without time we've got left. Miranda, I think we mentioned earlier on the low and middle income tax offset, which was expanded at some stage and was temporary, supposed to phase out when the government brought in all its new tax rates, and now it's seeming to be extended because of the crisis as a sort of stimulus, and now it's extended again because get headlines saying they're going to sort of put up taxes on low and middle income people, and that doesn't look good. But it doesn't seem to be anything to do with tax reform. It's like a cash $1,000 at the end of the year for people earning up to $90,000 or so. Is your view that it was in danger of getting embedded in the tax system now?
I think it is, yeah. Well, I mean, we've done it before, right? We've embedded funny offsets before in the system. In fact, we have one for seniors and pensioners that is also a bit of an issue, but I would much rather see us get a clearer progressive rate that's reasonably transparent and eliminate that. But probably that does involve, and maybe the government is realising this, that actually, moderate income earners they do need that lower tax. They do need that tax cut to be made permanent, and so that might involve some kind of calibration to those stage 3 to be delivering more of the stage 3 cut into the lower middle. I'm not opposed to tax cuts for workers, right? But the question is, at what point where is the sort of the distributionally fair and also potentially the more efficient point? The other big issue that actually Jason raised in his initial speech is high effective tax rates, effective marginal tax rates on really low income earners who are on welfare going into work. They face tax rates of 70%, in excess of 70% for doing casual gig labour, which is the kind of labour that they are often doing. Casual jobs, it's a really big disincentive, or you take your money in cash, right? So there's a big incentive for tax evasion and cash payments. So, we could smooth that a little bit at the very bottom of the distribution. Age pensioners, we want to have more mature age workers. They also face very high effective tax rates, losing a bit of pension going into work. We could smooth that. And the biggest issue, of course, is getting women as second earners into the workforce by removing the kind of shadow tax system that applies to women who are looking after children, essentially by picking up more of that childcare cost and enabling women to kind of generate that income for households. So there are ways we could tweak those things, eliminate the limito by making it more transparent. To be honest, I would trade that off with stage 3, but I suspect most other people in the room don't agree with me.
But it's not a good thing to...
It might be a good investment anyway.
But would it be not a good thing for that to just to stay in the system?
Well, it could stay in the system, and then we have to find the money elsewhere. Have we got the money for your standard deduction? I don't know.
But it gives you don't know what your marginal tax rate is when you've got one of these limitos.
The limito is completely non-transparent, but people really do notice that they're not getting it. I guess now it's in there, right?
Well, they're expecting
And they spend it.
And then they'd spend it ahead of
In a
time.
cyclical policy sense, in a COVID recession, we need people to spend. How do we get money into people's bank accounts as quickly and efficiently as we can? People do spend it. I mean, we saw that very, very clearly last year. We saw record numbers of Australians lodging their tax returns early to access that. It's visible, I see it, and I go and I spend it. I don't think it's good tax policy, but I think it did work last year in terms of...
It's a washing machine, I suppose. You need a new washing machine.
But it should be that one-off temporary, and it's a bit like the $750 to welfare recipients. Use the system that you've got, get money in quickly, but you don't want to embed it because it embeds complexity.
Steve?
Yeah, the limito has two reasons to exist. One is, as opposed to all other taxes, it's only calculated at the end of the year, right? So it gives people a refund when they didn't have a refund, right? And that's why they like it, because people like getting money. The second thing is it's targeted. So that's what makes it complicated, right? Is it has a phase in and it has a phase out. And those phase in and phase out ranges increase the effective marginal tax rate. So, while the government is giving average tax relief to the middle, it is raising marginal tax rates for a huge section of the population. In fact, right in the middle of the income distribution where most people are. And if you have some flexibility over how much you work, you're a part-timer, should I work 1 extra day or 5 extra hours? Those marginal tax rates really make a difference. So.
Right, so look, we've unfortunately coming towards the end of their time. I might just throw in just one quick, almost yes or no one, and it goes to some of the things to do with complexity of the taxing we're talking about and size of government, how much we're spending. Out of the Royal Commission to Aged Care, I think one of the commissioners recommended there be a special levy to pay for the increased spending. Just maybe, do you think more, and levies are things that are controversial. I think Henry suggested we get rid of things like the Medicare levy and so forth, but maybe go through the panel. Joe, do you think that would be a good idea, or that would be just needlessly adding to complexity?
I'm going to come at it from the other side, which is we have an aged care crisis in this country that is getting worse, not better, and we absolutely have to do something about it, and I don't know that there's another easy option.
It's a question of the orders of magnitude. I mean, the government's saying they're going to spend an extra $10 billion in this budget over 4 years in response to the Royal Commission. It will take tens of billions of dollars to do what the Royal Commission has recommended.
Yep.
And if you're thinking a specific levy on that, for that, I don't think politically that's going to be very easy to sell, but it is going to have to be funded. They're only going to do enough this year to get through the election. They're saying we've ticked this box and so on, but they're not solving the problem as it was identified in the Royal Commission.
Yeah, look, it's a kind of political earmarking and not a legal earmarking, because we can't do that in Australia anyway. Medicare levy's not earmarked, even though people sort of think it is. So it's not a good idea. I'd much rather we could raise that revenue by, doing something a little bit better with our tax system as a whole, broadening that base a bit, broadening the GST base a bit. The revenue could be explained to be for aged care. You need that political commitment. I guess the problem is people don't necessarily believe the government's going to be spending that money where they say they'll spend it.
No. And finally, Steve.
I've got nothing else to add.
Okay, well look, with that, can you all put your hands together and please thank our panel.
Thank you so much, Michael. Stay seated. I'll be very brief. But again, thank you so much to Michael for moderating the panel and for the panellists. I think we did pass that bar of that discussion being fun. I had a good chuckle at a range of the comments, particularly John's. I really enjoyed, but also the fun of intellectual stimulation and coming out of the office and engaging really experts in the field on a topic that's so important. I think Jason hit the nail on the head, and thank you again, Jason, for making those remarks. This is one of the most important discussions that we're not having, so we really hope you delve into our report. It's thoroughly worth a read and will be enjoyable. This is one policy area we're passionate about. We'll be hosting similar events and producing work on climate and energy reform and on childcare and early learning over the course of this year. And we hope we can have you back again. Please join us for a drink outside afterwards, and thank you so much again for coming. Thank you.